What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Elam. I think I murdered your name there. How you doing today?
Hi, Elam King. I'm doing fine.
Excellent, excellent. And I got some great news here for Elam. It is that today, I don't know if you're aware of this, but we're joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate players. That means deal sponsors. That means investor relations people. It means operators. It means all sorts of people like that, buyers and sellers. And you may ask yourself, why would you do that? And the answer is, if you've ever heard of an off-market private deal, they're sometimes called 506B syndications. They're the kind of deals that you're not allowed to publicly discuss. And the only way that you're allowed to discuss it with somebody is if you have documentation of your prior substantive relationship. Because if you don't have that and the SEC audits you, they'll get ants in their pants and your whole business will be a house of cards. So that's basically what's going on. The benefit to you for watching these episodes is you will learn how to more effectively communicate on the subject of real estate deals, real estate in general, especially in the commercial side. And honestly, I think that your future in this industry will hinge on that ability to effectively communicate, and you'll know how my guest fits into those deals. But before we get talking too much about real estate, Elam, do you want to say a thing or two about yourself?
Well, I could talk about other things about myself, not because I'm full of myself, but because I have a very I have a very unique story that most of America is not familiar with. So I grew up Amish,
Hmm.
and a lot of people find that very fascinating. Um, that's a real quick thing about me. And then uh, tw 15 years, no, 13 years, I think it was after I left the Amish, I married a Mexican. So, Amish Mexican marriage.
I love it. I love it. It's especially funny because now you're on a podcast with a guy who's only part human. That's hilarious. But
What are
before we
you, the
get
rest alien or something?
no, I got a fully digital AI avatar of myself. I'm technically immortal, but that is a very strange way to start things off. Almost as strange as saying, "But wait, check your eight." Elam, I don't know if you can see through the camera and into the user's device, but down there somewhere they might have this hideous subscribe button, and maybe they should, get rid of it. It's just embarrassing, quite frankly. Okay, it's a stupid joke, but whatever. Let's talk about motivations. By this point, I've now had over 350 of these interviews with different commercial real estate players and syndicators and whatnot. And everybody has their own unique why, that's for sure, but I find that they fit pretty neatly into these five different categories. And the reason why it's important that I ask is because these deals take months to close, they take years to go full cycle. Of course, Elam, he focuses more on the short-term rentals, but this stuff still applies. Basically, if you're thinking about partnering with somebody, if that's even on the table, you got to figure out what's going to keep them from throwing in the towel when the going gets tough. And I found that these five categories fit pretty well for most people as some sort of combination. The first one of which is preservation of purchasing power. What on earth is that? Some people out there don't have to have a job. They are job optional. The way they pay their bills is from the proceeds of ownership. That means they have a portfolio of assets and the profits from that are how they pay their bills. And of course, that sounds more or less ideal to a lot of people. And it might make you wonder, well, why would you go through the hassle of another acquisition if you're in that situation? And there's a couple scenarios that stand out most as far as answering that question. One is if inflation is rearing its ugly head, that's going to eat away from the purchasing power of your cash flow, so it's going to be time for another acquisition. The other situation is if there's an asset crash or in general just distress on the property due to whatever reason. It could be an actual asset crash because of hot lending a couple years ago, or it could be divorce or death, all those different things. And everybody in who's investing in real estate should try to buy at the steepest discount you can. But people who have this as their main motivation, they're only going to get involved if it is a real sweetheart deal. And I gotta confess, even though I do add to my portfolio at a discount, I am not this far in my real estate journey. If you want the descriptor of what I'm all about right now, it's trading time directly for wealth. And that all stems from my technology background. If you've ever been a high wage earner, high salary earner, you probably noticed your tax bill was enormous. And as a matter of fact, it's bigger than anybody else's. And me personally, the tech background was CRM, mass marketing for businesses that did seven figures or more per year in revenue. And in 2014, my agency, I downsized it to go full time with an Ohio firm that was flipping 10 houses a month. And when I was watching the boss making money hand over fist and also having a much lower tax burden, it hit me that I needed to pivot. Instead of going for like seeking an ever increasing salary size, it's better to work and get rewarded with little slivers of equity, in other words, deployed capital. So that's what I'm up to. But of course, that's a little bit too subtle for some people, especially a lot of youngsters. When they are attracted to commercial real estate, they want to control their schedule or maybe even hustle like crazy and fast track their retirement. So taking control of your schedule, it might just mean working fewer months per year. But quite frankly, I find that this is a very common motivation for why people are in this industry. But I have to confess, it's really not everybody. A lot of people who want to fast track their retirement, they think that everybody is secretly trying to do that, but I assure you it's not true. For example, the next group, they're just plain fueled by ambition. They want their name on a great big giant building. They want that generational wealth and make sure that their great grandchildren never have to hold a day job. And that's why they're hustling like crazy now, and they're going to continue to hustle into their 90s. And for some circles, that's vilified as a whole. They think that people who are fueled by ambition are a net negative on society. But the fact is, if you want these properties taken care of, if you want somebody who's not going to drop the ball, then people who have this level of ambition are going to be absolutely pivotal to your team. So I don't think the label fits. But the other group that's going to keep hustling into their 90s, they realize that there's a financial component to making a difference in this world. And they've picked a sector of society, not so much their own family, their own generational wealth, but maybe it's a sector of society, maybe it's the environment, maybe it's animals. Who knows? But the main thing is they want to make a difference. And the financial component means they have to build a lot of wealth. And that's why they're making these acquisitions. So Elam, as far as these five different categories, what combination of them would you say describes you best?
I think the last one here, um, at least in some ways, I'm sure I want to build some sort of, money making machine that pays my bills, and that I have a retirement when the day comes. Like I don't want to get to retirement and it's like, okay, now how am I going to pay my bills? And I'm seriously seeing people struggle that way, and it's just going to be rough.
Hmm.
Um, I don't want that.
Hmm.
Um, but aside from that, um, I I have motivations beyond just business, beyond just real estate, beyond just even creating wealth, and it's how can I be an asset to society is really um
Hmm.
and I talk about it this way that in the hospitality space in which we are in, it originates from the idea of, well, I say it originates. I should say it this way. Hospitality is often understood as a bed and maybe a meal, like breakfast, right?
Hmm.
But that's a very, very limited understanding because that implies that we only have physicality, and everyone knows we're more than just our physicality. We have emotions, right? Uh, we might be struggling with something. We might be having a bad day. That's not can be affected by our physicality, but it's so much more than that. We're as humans, we have a soul, i.e., we need love, joy, and peace. Those three things. And I'm looking at how can we in the hospitality space do more than just provide physical enjoyment, so to speak, or physical comfort, but rather how can we touch people's souls? I have a soul. I need help. Like right now, I'm struggling with something. It's like, and I'm kind of like talking to people because it's so like overwhelming, right?
Hmm. Hmm.
That and a real brief story about myself here is I went with a couple of, and this is just a really short version of it. I went with a couple of friends to the Grand Canyon and we were hiking down and the sun was shining onto the opposing wall, and it was just the most stunning, absolutely beautiful thing that I've ever seen. And what that did, I was struggling with something at the moment, and what it did is it just that turmoil, that self-demeaning attitude I had about myself just kind of disappeared.
Hmm. Hmm. Hmm.
That is what I think hospitality should be.
I love it. I love it. Yeah, Warren Buffett says that in any business you need to delight your customers, and I think that goes right into it. I think it's so many entrepreneurs, they're basically destined to fail just because they are not interested in helping people genuinely. It's just basically a
Yep,
means to an
yep.
end. So I'm really happy to hear what you just said there. But of course, when we're talking about motivations as we just did, it's pretty easy to sound overly optimistic, even bordering on naive. But we can bring that back to reality by going to the tolerance for risk assessment. If you've ever been involved in one of these private off-market deals, these 506B syndications, whoever the securities attorney in the mix was, and there really should have been one, that's the biggest red flag there is if there's no a securities attorney involved in whatever your investment is, because you have to register for an exemption. You can't offer passive income from other people's work without an exemption or a specific type of license, and even that doesn't seem to work. But when I was going through that questionnaire, that the securities attorney insists that everybody involved in an off-market deal fills out this financial suitability questionnaire with all these invasive financial questions like what's your net worth and all that kind of stuff. And one question in particular, when I was going through the questionnaire, it jumped out to me because it lacked utility. It was the one asking about the applicant's tolerance for risk. And so I made my own version of that question, and you're welcome to use an answer inside real estate or outside real estate, but here it is. There are many popular investment asset classes, but I think blank is too risky. So Elam, it can be inside real estate, outside real estate, anything that's just what's too risky for you to invest in.
That's a great question. Um, Ironically, I'm in the STR space, which is a bit more. I don't even like to call it risky. It's just a bit more volatile, as in it goes up and down a bit more. You have
Mhm.
seasons, you have different things that can affect it. Um, so you could say it's a bit more risky, but obviously I'm in it, right?
Mhm.
And we have done well, and we continue to move forward. Um, I mean, real brief, it's an asset class I don't understand, and that's where the risk is.
Mhm.
Um, like commercial office space. I absolutely don't understand it. And I hear all of the um, media on it. I don't know whether it's true or not,
Mhm.
but it just seems like a doomed asset class.
Mhm. Mhm.
But then I hear people buying it. But I don't know.
Yeah, yeah, yeah.
I
After
just don't understand it. I don't have interest in it at this point. So, you know, maybe that's the most risky one for me. I don't know.
Yeah, absolutely. And if you can't force appreciation, it's like what business do you have in it? You should know your skill set. So I love that answer. And at the risk of seeming too nerdy, this next slide, I confess, I actually didn't include it for the first couple hundred chance encounters because I know that there are a whole whack of people in this industry who are they're like public relations, they're marketing, they're front of house, that sort of thing. They're not the type of underwriters who are going to be up to their eyebrows in these different details with every single metric and tweaking different things to see how you can tweak the business plan and whatnot. But it hit me that even if you are that you're not the real underwriter, you're the front of house person, there's still going to be some metrics that you lean on more than others. And for anybody in the audience who is only listening and not watching, I'll read them all out. I've got 14 of them here, and it's not an exhaustive list, so some underwriters have other metrics that they rely on. You're free to use those as well, but this is certainly a good start with 14 of them. The first one's cash on cash, then there's IRR, which is internal rate of return, then there's cost per door, NOI, which is net operating income, there's going in cap rate, which is really talking about the difference between the cap rate you're buying for versus what the standard REIT acquisition cap rate is in that area. Then there's the loan interest rate, especially important if you're going to be assuming a loan. Then there's the occupancy, which is occupancy is a little bit different for STR, short-term rentals. It's still absolutely the crux of whether your business is going to succeed or not, but it's not like in a building where the occupancy tells the tale completely. But then there's average income where the property is located. There's the amortization period of the loan. There's the difference between the market versus in-place rents. So you have some rent growth that you can bake in right there. There's population growth where the property is located. That gives you some appreciation baked in for demand. There's the sponsor record, which is the number of deals that have gone full cycle, the number of deals that are on the go right now. That one's a little bit less applicable to STR. Then there's the waterfall split or exit strategy, which is what happens to your investment after your capital has been returned. And then last one I have listed is DSCR, which is debt service coverage ratio, which is how much money, how much of the revenue from rent and amenities is going out the door immediately just to pay for the loan. So once again, you can feel free to pick another metric, but if you want to give a top two or three or something like that, there, Elam.
Yeah. Yes, it's a really good question. By the way, real quick on the sponsor record, you kind of mentioned that it might not be as huge for the short-term rental space. I think it's bigger because a good sponsor, a good operator on a short-term rental can double your revenue.
Mm-hmm, mm-hmm,
And we've done that over and over, not double, but okay, I should say can. There's some potential there. But we've over and over where we've taken on properties and we just boom, their revenue popped
mm-hmm,
just because of the way we operate. So I think that's a huge one.
mm-hmm.
But what is my favorite one? There's a lot of them, of course, as you have 14 and there's more, right? For me, when I look, so you're asking so there's, I guess an investor has different things that they look at as opposed to what the sponsor, look at. But if I want to be investing in someone else, I would want a very good sponsor record. You
Mm-hmm.
know, because at the end of the day, people will look at numbers, but they'll look at the person more because we're humans and we have need for human interaction. And so if we don't like someone, why would someone invest with them? So that's an important one. But for me, when I'm looking for a property, at the end of the day, I look at profit. Huh. And we all agree with that, and all these metrics are different ways to like evaluate profitability, but I don't bank on appreciation. Appreciation is icing on the cake. I must have a cash flowing asset, and probably a good one there is a cash on cash
Mm-hmm.
because IRR takes into account appreciation
Mm-hmm.
if you resell or refinance, right?
Yep.
And I use that metric a lot, but really at the end of the day, I want to see that a property can cash flow on a yearly basis uh, as it, you know, not just, well, 5 years from now it might, and then you sell it, you might actually be able to bank on appreciation. Or I want to see the property in cash flow on a year after year once it's stabilized. So that's
Exactly.
probably my favorite one.
Sure, sure, and that really was what I was getting at when I was hitting the sponsor record. Short-term rental is a buy and hold strategy, so it's not as transactional where you're flipping your deals, as frequently. You're
Well,
gonna
you could
you
actually.
absolutely could, yeah, definitely. It's just that's the one that in multifamily, especially, you're really remiss if you're not checking out the sponsors as much or more than everything else, because yeah, they're the ones who are going to make the decisions with how your investment dollars are spent to
Yeah.
find more revenue. So yeah, that's absolutely number one. I'm eating that answer up like a delicious subscribe sandwich. As you can see right there, that's pretty wild, right? It's a little bit more than the whole, yeah, a little blast right outside of the Amish realm there, just like the Dan does deals commercial core competency cube with the 6 different roles in a commercial real estate deal. And the reason why I pull this out and I take a couple minutes to go through all 6 sides in every episode is because I think this is really the key to more effectively communicating on the subject of commercial real estate deals and how to describe the different roles, the different people that have to be involved for it to actually work out. And if, as I'm explaining this, you're like, wow, I really need to get me one of those, the good news, it's absolutely free. You can go to dandoesdeals.com. There's this big, huge button that you can click on and print it out and all that kind of stuff. And yes, I committed the cardinal sin of marketing, which is you should never give your freebie away without asking for some sort of contact information. And that's what I did. I didn't ask for your email or anything. It's just because I really believe that if you're going to have a future in this in this career, a career in this sector, your ability to effectively communicate is going to make or break that. So let's do it. Repositioners are the first people I'll talk about in a commercial real estate deal because they're the most visible people. If you're talking to somebody who says they're in commercial real estate, they're more likely going to be repositioners than anybody else because they have to be sort of social butterflies as well as understanding these different deals. One of the reasons why I have a picture of a bunch of different deals and a bunch of paperwork here is because that's what they're up to. They have to look at a whole whack of different properties to find that one that has the most opportunity. They're underwriting the deals, they're doing the math, they're figuring out, first of all, is this property even making the amount of money that this seller or broker is claiming it is? Because but of course that's also if you're buying existing inventory. But I mentioned how the repositioners are social butterflies, and quite frankly, the most peculiar part of getting into commercial real estate and becoming a repositioner is you have to have a vast network of financiers. Those are people who only deal with paper and money and the owners of the property. They do not deal with residents or tenants or any of that kind of stuff that's not within their purview. And the financiers themselves, the reason why the repositioners have to have such extensive financier relations is because if you can secure a more advantageous loan, in other words, cheaper money, that goes straight to the profitability of the building. So that's why they're constantly talking to more people who want to get some benefit for their investment of dollars. So that's what a financier is. They are not going to be on the GP team. There are going to be people, everybody who's a repositioner has some financier relations though. So the next thing that a repositioner is going to do to find some upside is to take a look at the operations and say, oh no, we got these Benjamins going down the toilet and we need to put a stop to that. But of course, there's more to operations than just unclogging toilets and collecting rents and mowing lawns and shoveling snow if you're where I am. One of the things that I contribute to operations as a GP when I'm on a GP team is the social media, the web-based applications, the automations, and those sorts of things. And that might not seem that useful, especially if you're talking about the bigger deals that I've traditionally targeted, which are 100 units or more. The reason why I'm a valuable contribution in that case is if you understand that vacancy is the enemy, then even if you are outsourcing your property management to a third party, which is pretty common in the 100 plus unit space, then if they cannot fill those units, somebody with some serious marketing chops needs to step in and get those units filled. And so that's my contribution, one of my contributions right there. But there's only so much you can do with operations to find more upside. I should emphasize that most of my guests on the show are in multifamily, so that's why it's such a mature industry. But as a repositioner, the next idea you can have to find more upside is to get a contractor team involved to do a value add. If you upgrade the property, then the next residents are very likely willing to pay more in rent than the previous one because it's a nicer place. But if only it were that simple. You can spend endless amounts of money on real estate by upgrading, but that doesn't mean you're going to get a return on investment. So I wouldn't recommend gold plating the toilets, okay? But the contractors
Yeah.
themselves, exactly. When you are dealing with contractors, you have to make sure they're not dragging their feet. You got to make sure that they're not using subpar materials. And I don't know if you know this about me or not, but I'm from the internet. That means I need locals. I need boots on the ground who can be there in an hour or two because categorically that will not be me. I'd still be stuck at an airport in an hour or two. So you need somebody who lives real close to the property who they can drop by, make sure the contractors are using the appropriate materials and keeping the schedule and making sure that the operations, especially if you're outsourcing them, they're not cutting corners and sloughing photos and whatnot. But let's say you have aspirations of becoming a repositioner. Maybe it's because you're an engineer or you're a physician or an attorney or something like that, and you've been eyeballing this 350 unit apartment complex down the street and saying, I want a piece of that. So you decide, hey, I know how to buy a house. I just, put in my deposit and then I borrow the rest from the bank. And I betcha if I pool some money with my circle of friends, we all kick in like 100K each or something like that, we could take that 350 unit apartment complex over. Well, when you as a repositioner turn around to the financiers and say something along the lines of, hey, I got this deal, it's 350 units, it's tens of millions of dollars, do you have, I don't know, tens of millions of dollars you want to say, lend us for this? Well, the financiers are going to have a question that I haven't prepared you for yet. And if you have a guru or you're in a mentorship program or something like that, I highly encourage you to listen very carefully to this next part, because what they're going to ask you is, who's your sponsor? Who's your KP? What's that all about? We're talking about big commercial properties here, or at least I am. And the fact is, the bank will not consider you eligible for a loan unless somebody in the fold already owns a similar asset. That way you can prove that you're not that likely to take all of the bank's depositor money and run the business into the ground using it. So that's why you need a sponsor KP involved in the deal, even in that little hypothetical there. On top of that, you need a certain amount of liquidity to prove you can run the business. And then among the ownership team, the GPs, the collateral, you need a balance sheet of at least the amount of the loan. And then if you've got all those pieces, you got yourself a commercial real estate deal. So once again, Elam, I get that you're in short-term rentals, so it's like a little bit less complicated than like a 100-unit apartment complex, but it can very easily get as unwieldy as having several different properties, and all that kind of stuff. But it sounds like you're vertically integrated with your short-term rentals, but I don't want to put words in your mouth. Which
We are
piece of your puzzle? Yeah, you are? Okay.
pretty much, yeah.
Okay, cool. And so then the piece of the puzzle, like if somebody's talking to you in your organization, like are you more on the public relations side? Are you doing the underwriting? You doing the asset management? Like what's your biggest responsibilities?
Yeah, yeah, yeah. Well, I'm still involved in the operations some, but I want to get out of that, and we're looking to hire someone to replace me in that, where this person handles the operations, and then I just focus on the acquisitions, the asset management, the big picture, top level type of leadership. Um, yeah, so and what adds, it is true that short-term rentals may not be as complicated. They can be more complicated in a different way. So
Right.
if you're buying a big apartment complex, it's a heavy lift. It's big muscles. But all this stuff is the same. You have DSCR, you have blah, blah, blah. You have all those things. You have market rents. You can show all that. But if you're going into the short-term rental space, like we did recently with a building, it's so big, it had no comps, this and that. And the other thing, it was very difficult to get financed, which what I did then is the seller financed a bunch of it. So that's a different complication. And that's where I'm in. And then you have the whole hospitality sector yet. You know, long-term rental, sure, treat your tenants fairly, but it's not like you're like over some crazy customer service deal on a day-to-day operations,
Hmm.
or a daily grind that way. So that's, yeah, again, more the asset management, more the acquisitions, company growth, and then hand off the operations to some other people. Yeah,
All right. I love it. I
and
love
of
it.
course, yeah, public relations is, I guess, kind of falls on me. Yeah.
Sure. Okay, cool. So let's talk about the properties themselves. And once again, most of my guests on this show are in multifamily, but regardless, you're going to have, when somebody asks you what's your buy box, what you're looking for, something like that, real estate people, we're asking for three main things. First one's geography. Where is it? Which state, which county, possibly even which neighborhood. Okay, that's absolutely going to matter before somebody's like, I know I got another deal, but I really want this deal too. Okay, that geography is going to matter. Second one's going to be size. In multifamily, you usually define size by the number of apartment units, and the reason why it's relevant to know the ideal number of apartment units is because the type of company that takes over 10, 15 unit apartment complexes, they're going to be fundamentally different from the type that take over 150 units. But other types of real estate will go off of acreage or square footage. Short-term rental, you still have square footage because they are ultimately houses most of the time anyway. But that size will still matter for that exact same reason. But the third one is usually called class. I don't like the word class because I don't think it says enough. I really think desirability be a better term, especially because
There you
class
go.
is singular and it's talking about two completely independent things. When you're talking about class, you're usually talking about the condition and then you're separately talking about the area. And if you're talking about the condition, it's how old is the property, like the building, how beat up is it, what sort of luxuries and amenities are there, that sort of thing. That's the condition. Whereas the area, if you're talking residential, like in short-term rentals or in multifamily, then the school districts where the property is located, like that's more important for the multifamily, for the apartment complexes and long-term rentals. But regardless of the type of commercial real estate, the type of real estate, the crime rate is still going to be very, very relevant. And then, of course, there's that old trope of location, 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 which what they really mean to my ears is they mean traffic, traffic, traffic. If a gazillion people are passing by that property every single day, it's going to be more desirable than some place that's more on the outskirts. But both the area and the condition, the way that you rank them in real estate is the same way as in grade school, where you have A plus at the top, and then A minus, and then B plus, and so on. So, Elam, as far as the short-term rentals, I imagine it's probably easier to buy like a portfolio of a few houses at once, or I'm not exactly sure what your model is, but as far as if somebody in the audience has some properties that they're looking for a goods entity to take over, what's easier for you guys to say yes to?
Okay, I'm not quite sure I'm understanding your question. So you're saying if we would want to sell our portfolio, or if we want to take on more
If
properties?
you want to make for a next acquisition, what sort of details would make it ideal? What would the buy box be for that?
Yeah, yeah, yeah. I mean, real brief, our buy box currently is somewhere between Boston and Washington D.C. And here's why: is because there are a lot of people in that section. It's some of the most densely populated in the states. So if you're talking about traffic, and you made a good point, desirability, that is also a factor. We want a property that people are willing to come to. Again, more than a bed, right? Um, and bigger properties, like I don't want to go buy a studio unless, well, one property that we have all but under contract. It's just because the attorneys are just kind of going back and forth on a couple of details. Is a 32 room motel. Well, those are little studios, but it's in one group, and so from an economies of scale perspective, it makes sense, right? But I'm not going to go after a little studio because it's just not worth the time.
Mhm.
Both from an acquisition standpoint of the energy I need to put in to get financing this and that and the other thing, and then also from an operational standpoint. So it costs us about the same from an operation standpoint, not the repairs and stuff, but from an operation standpoint, to manage it, it costs about the same to manage a 10 bedroom as it does a studio. So why, right? So again, close within an hour or two of a major metropolis. New York City is one. That's why we like to invest in the Poconos, um, and very desirable. Like and especially this is what I'm attracted to is unique stuff
Mhm.
because the current generation, the baby boomers might call the current generation weird. Call them what you want.
Uh-huh.
I'm at the very upper level of the millennials.
Mhm.
And then the Gen Zs are a bit more that way. So, baby boomers or older millennials, we can call these people weird. Fine. Whatever. But the truth is that that generation is looking for something different.
Yeah.
That's our buy box. Um, by the way, going back to the thing I had shared earlier about more than just catering to our physicality,
Mhm.
it's not just a passion. It's not just I want to do good in the world. It is that, but I also believe there's more money there. So there's an integration here,
Mhm.
and so that includes the buy box,
Mhm.
something that captures the imagination of people, um, and is also close to a bunch of people, is bigger, um, and all that.
Mhm.
But the short-term rental, buying short-term rentals, there's a lot of complexities. Like doing a DSCR loan doesn't always work
Mhm. Mhm.
because the property's like maybe has 15 acres. It's like, well, and the 15 acres has a little bit of value for the guest, but how do you justify that? You can't.
Right.
To the
Right.
banker. You can't to the
Sure.
banker. You can
Sure. Sure.
talk till you blue in the face, but they won't listen to that.
Yeah, yeah, and I'm
So
glad you brought that up because like when it comes to mobile home parks or self-storage, having room to expand is absolutely pivotal. Like I always hear that every single time. Whereas in multifamily, you don't really hear that. It's like you're not going to construct another 150 units usually when you buy a property like an apartment.
it's probably already subdivided if
Right, right,
yeah.
right. And the thing that was crossing my mind was when somebody says short-term rentals, I'm not sure if they're saying like full hotels, full hospitality. If you mentioned motels, or if you're just talking about a series of Airbnbs. Do you want to fence that in for the audience? Like
Yeah, yeah, yeah.
yep.
So I'm not necessarily interested in changing our business model from short-term rentals to hotels because they do operate differently.
Hmm.
Now they're close cousins, right? But they are not the same thing. The and what I see here in the future is that short-term rentals are slowly going to get more traction. Motels, hotels in general are going to lose a bit more.
Hmm.
Not like drastically, people still there's still going to be demand for it, but the hunger for short-term rentals continues to rise. Even though there's all this stuff in the news about Airbnb bust, it's a big joke.
Mhm.
But what's really happening is it's just a bit more market saturation than it was before. It just means hosts are going to have to work now where they didn't used to have to. But anyway, so this 32 room hotel, our business model, again, short-term rentals, and a short-term rental can be in an apartment building or it can be a single family home.
Right.
So the business plan here is it's a motel. They don't need to enter into the building other than their own room.
Mhm.
So we plan to do something unique with these rooms, make them very attractive. It's in a major hot location. But we'll still put it on Airbnb. We'll still do all those things, just like we're doing now. It's just going to be a group of them, group of short-term rentals, Airbnbs, whatever you want to say, as opposed to just one single one.
I love it. I love it. So let's talk about people. My favorite part about commercial real estate is that unlike other sectors where people, have big boundaries put up, walls put up, not they don't really want to make more friends. The fact is, commercial real estate, I think it's because it's multi-factor, it's multifaceted, I should say. So everybody has these different roles, and nobody is going to be all six sides of the cube for any meaningful amount of time. They're going to hunker down on one or two of the different sides and become excellent at that. But I think that's the reason why people in this sector are so eager to make introductions, referrals, things like that. But even still, our unique skill sets are going to dictate who we're better off helping. And everybody in this industry is involved in deploying capital, so everybody's eager to meet more financiers. Me personally, though, with my marketing background and all that kind of stuff, traditionally it's been the sponsors and KPs that I'm most interested in speaking to, especially now that I've got the relationship I do with a debt fund. So we're making first position loans for the right types of properties. So people in the audience who are sponsors and KPs, I'm really eager to speak to you. And of course, I'm from the internet, so that means I depend on locals more than the average person. But Elam, as far as people who may be in the audience, if you have any 506B deals, don't mention them, or else the SEC will get ants in his pants. Especially if you say talk about financiers, you're going to entice them or something. Like, don't wave it
Right.
in front of the. It's very
Yep.
enticing. So who are you most able to help in this sector who may be in the audience?
Yeah. So as a company, again, we're vertically integrated. We got the management down. Okay, we're still continually improving, right? But we have 6 years of experience doing that and have had a good track record, high occupancy, high rates, all that kind of stuff. We know how to market. Okay, so we know how to do that. We know how to operate. Um, we know how to manage the asset. We know how to do all those things. I I even know how to go find the properties, although we are working on our current deal flow to try to get up a little bit more. But our biggest bottleneck right now is really people with money, um, who are willing to join us and join us on our deals.
Hmm.
Um, yeah.
All right. So
So
then,
again, our if it wouldn't be about the money, we would be just like boom, you know. But right now, there's a couple of deals I'm looking at, and I'm kind of gingerly walking around it because it's like, okay, I'd love to put that on the contract, but if I do, can I get the financing for it?
right.
I mean, we have a deal right now under contract, closing in 6 weeks or so.
Hmm.
Well, I just got my final funding for that, at least committed to, um, as of a couple of days ago, right?
Hmm.
So got that one taken care of. But it's like, okay, now I did that. Now maybe I'm more open to going after something. But I'm communicating with that our bottleneck is uh, people willing to finance deals.
Yep.
And largely that is just because I'm still very, very Amish. Amish people generally don't talk about themselves, they just go work.
Hmm.
To a fault where it's like, I'm becoming more and more aware. It's like, wait, I could be so much more successful if I would take the time to build relationships with people who have money, who are looking for someone who's going to take care of all the daily headache.
Hmm.
Um, you know, it's I'm seeing that as a need. I'm seeing that as kind of my background. I'm still kind of sometimes in that mode. Now I'm doing more and more to kind of get out there, get our name out. But that is a natural thing for me. I'll just go work hard.
Hmm. Hmm. Hmm.
It's like, which is admirable, if you will, but it's not scalable. So it's
Right.
like, okay, wait. What am I doing? I'm just working, good in itself, but I should actually be pivoting my energies more to building a network where we can all work together. So,
Yep.
and a good example is the hotel deal. I found through a group that I was part of. I threw it in that group, say, hey, I'm looking at this deal. Anyone want to partner with me on it? And the reason was because the hotel has 10 acres, 3 acres of commercial, which is where the hotel is, and then 7 acres of industrial. Well, I don't know industrial, nor do I want to figure it out. But I want that deal, right? And it didn't make sense just to buy the hotel and let the land sit in the back. So that's, yeah, I'm super excited about it because I built my network a bit more. I'm partnering with other people, and now, and they're helping bring some money to the deal, but it's also they're bringing value to the deal. We're JVing on it, but still, yeah, it's going to be amazing.
I love it. I love it. And so the question on everybody's mind then has to be how to reach out. And I'll just sandbag that by talking about myself. I've got this really distinct last name right here behind my enormous microphone. And the nice thing about it being so distinct, it makes it's really easy to find me online, especially on LinkedIn, where I spend most of my social media time. So that's a great way to reach me. Of course, since I've already drawn attention to my name, you can also check out Amazon.com. If you punch in my name, you can see I've got a few different books that are on different business related skill building and cultivation, that sort of thing. You can check that out. But if you are going to be involved in investing, if you're going to be syndicating deals, if you're going to be taking on passive investors, I highly encourage you. You can pause the video and scan this QR code that I've got on the screen. That'll bring you to the FAQs page of 506B, which will explain what you're required to do for the SEC for your 506B deals, for your documentation, making sure you have that in place. But it also offers the service of maintaining the backup and IT and all that kind of stuff of your documentation. The idea being that if your laptop falls into the bathtub, you'll still have that documentation in place to give the SEC in the case of an audit. And if you are audited and you don't have the documentation, they're going to assume that you publicly solicited people, and then your business is going to collapse. So that's not so great. But Elam, if people want to reach out to you, what are the best ways to make that happen?
Best way to reach out to me is Facebook. So, which there's a couple Elam Kings out there. So I'll just give my exact handle. So facebook.com/Elam Z King. So ELAM as in messed up. Elam Z Zebra King as in king, queen, prince, whatever. Elam Z King.
I love it. I love
And
it.
I do check my messages, of people wanting to connect and um, wanting to send a message. So don't be afraid to send a message. I might not respond right away, but I will. And again, we're super excited about partnering, whatever, with people who have money, who are interested in the fun part of short-term rentals and the profitability as well. But we do all the hard work.
I love it. I love it. And that brings me to the final part, which is the public service announcement. It's actually not for you, Mom. It's for you in the audience. If you've been watching this episode and experiencing searing pains in your eyeballs and like migraine like symptoms, I'm confident it's because of the downright hideous subscribe button that's just down there. You can get rid of it for free. You just hit the button and that's all taken care of. And just to be completely clear, it doesn't cost you anything. The reason why I want so many people to click on it is because if enough people do, then YouTube will actually start to pay for these videos instead of me. I think that would be amazing. And the trade-off to you, just so we're clear, it's my videos may show up on your list of suggestions if you subscribe, but quite frankly, you can go ahead and ignore those suggestions because I just appreciate the fact that you spent this time with me. Just like Elam, I appreciate you joining me today. This has been great.
Gamers.
Awesome. Thanks.
What was that the cutoff button?
Well, close enough. Here it comes. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, and all that kind of stuff. So I hope to hear from you soon. Thanks a lot. 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.